Increased rates, high gas prices, market slowing down. The sky must be falling, right? Tune in to this month's episode to learn what's happening in the greater Calgary real estate market. Now in today's update, I'm going to share with you the most important things you need to know about the housing results from May 2022 that were just released by our real estate board. Already, we find ourselves nearing the halfway mark of the year. And year to date, it's been nothing short of a wild ride. I think you can agree. Now, we started this year off with a bang, completely obliterating 2021's January by 66%. Then in February and March, things continued, and we recorded absolutely record-breaking sales for that time of the year. It felt like the 05, 06, 07 boom days, but even better. Then in April, well, despite a pullback in total sales, things continued to sell well beyond prior bests. And then the funny thing, the media and the naysayers were saying the slowdown was in effect. Watch out, brace for impact because, the sky is gonna fall. And this now brings us to May. So I'm here to sadly tell you, I need to eat my positive and optimistic words a bit. Sales did once again fall. They were right. The headline predictions were true. It is time to panic. Nothing else I can say. Or maybe not. Maybe, just maybe Alberta, and specifically the greater Calgary area, is writing its own story. A story that is unlike other Canadian marketplaces and unlike many of our other North American peers. Let me unpack this and share you our unique story so you can rest easy and leave this update with confidence about the local real estate market that we're a part of here locally. So in terms of the sales summary, yes, we did see sales slip from April, which again was a slip from March. But that's not all. As I said before, of course we did. There is no way on God's green earth that sales pace could surpass those historical average by like 100% and beyond for very long. Of course, that was going to be temporary. So digging deeper, you'll see that we recorded 3,071 sales in the month. This is 100 sales per day. And guess what? This is now the best May of all time. Yes, the best May of all time again. Here we are breaking new record, and doing so in a year that we've already had such huge gains. So did sales slow in comparison to a few months? Yeah, okay, sure, but it's nearly irrelevant. And when looking year to date on this chart, you see again how far we sit above and beyond recent years in some of the best years of our history. Now, every one of our 4 property types did behave a little differently, but I'm gonna leave that a little bit till later as I unpack a few things in our story for you first. So let's flip now to the inventory story. First of all, many people focus heaviest on the total sales numbers to gauge the market. And I think this is a massive mistake. It's part of the story, but it's not the most important one, at least in my opinion. And this is where inventory does come in. A couple things are happening here I want to talk about. Number one, new listings to market. So while sales eased as a whole over the last month, well, so did the new listings to market. While firmly implanted in the spring busy season, you typically see more and more inventory get flooded to the market. This simply, though, isn't happening here. For 2 months straight, we've seen less new properties come to market in comparison to last year. Yes, we listed more in May than in April, as we should and always do, but it's a drop-off from the year before. So why does this matter? Well, the concern is if sales numbers start to slow, that as inventory climbs, it will disrupt the supply and demand equation and once again provide negative pressure on our pricing, and then the sky will fall. But again, we are writing a different story here. We are not seeing surplus inventory coming to market. We are seeing less than seasonal gains, driving us right to my second point, the active listing inventory. Currently, we are sitting with a 15-year all-time low for inventory for this time of the year. This is the opposite end of the worry spectrum. Again, why does this matter? Well, if inventory on the market remains near record lows, we as a market who may be concerned about housing values staying steady have a great deal of buffer room if sales do slow down far enough. But remember, I just finished saying May was the best sales month of all time for May. So you don't have to be a rocket scientist to understand how we are writing a little different story than the rest of Canada. Okay, let's transition to the third point in our market update triangle, the pricing picture. what does all of this mean in terms of our housing value? Well, here's the gist of it. Year over year, our pricing gains remain nice and strong, with a 14.5% overall growth. Detached 16.6, semi-detached 14.6, row houses 16.7, and even apartments grew by 8.9% year over year. So very strong across the board and strong across all areas, both in the city and around. This is also a month-over-month gain of about $1,700 from April. All of this in the presumed slowing or sky is falling messaging that is out there. Yes, the month-over-month growth has slowed, but again, of course it has. That's just the way it goes. Well, people will talk about the average sale price and also the median sale price adjustments as declining now since February and March. But this simply doesn't matter as much as benchmark. Benchmark is the truest metric of the market for us to use and provide you the most accurate measure of the specific market activity. What I will say though, sales in the apartment markets and the row home markets, they soared in May. And those markets are what? Priced more affordably. So as you record more sales prices in the cheaper part of the market, as it's continuing to fly upwards, it will obviously change the average price accordingly. Again, hence why benchmark provides the truest indication of what's happening. So now we've completed the triangle. So in summary, let me bring this all together for you. You might be saying, yeah, this all sounds great, but isn't the latest government rate hikes and the inflation going to continue to hurt us and cause us worry? It's a great question. Well, first of all, there is no hiding from the mess that the government has got us in. Nobody is going to be sheltered from the economic strain getting out of this will cause to each and every Canadian household. But there is a silver lining, and there needs to be some intelligent discussion around it, and specifically our localized situation. So point number one, here in Alberta, we sit atop the Canadian province's average salary chart, which simply means we make the most money per household. Number two, our housing prices. It's something I've mentioned many a time. Take a look at this to see how nicely we sit among our Canadian peers, who, as just mentioned, make less on average than us. Not only did our year-over-year growth be one of the lowest percentages in Canada, yet we feel really good about it, but we continue to be far, far, far lower than the big employment centers of Canada. Yet our power of an economy continues to push up and up. And then further to that, our recent price growth is the only price growth we've had since basically 2014. That is not again the case everywhere else in comparison. And no, just because we didn't grow doesn't mean we aren't going to be affected. It's more than that. It's because we didn't grow and everywhere else continued to get worse off in terms of their housing affordability. In tough times, people will gravitate to where they can afford to live and build a family, i.e. us. This is not a short-term thing. Remember, we are some of the cheapest real estate and we earn the most. That's a killer positive combo. 10th in the world in terms of affordability was just a study released a few days before recording this. That is something to hold confidence in and something that doesn't change overnight. It brings me to number 3. I can't leave this update without discussing interest rates. Take a look at this graph. Look to the far right. What do you notice? So this is now us after the last 2 interest rate increases. Plus, all that continued messaging that we are going to get bumped up again. So looking at this graph, do you think with points number 1 and 2 already discussed, and I'm assuming we've agreed upon this, can we weather a bit of a storm when it comes to a few interest rate changes to come and those that just hit us? Well, the answer here, locally, where we earn the most and are one of the most affordable places on the planet, yes, a resounding yes should be your answer. I'm in real estate. I earn a living as a realtor. I do better when more people are excited about buying and selling. Of course, yes, 100%. But nowhere in my discussion today, nor any of my discussions and updates to date, is my reporting on things coming from a place of greed or airy-fairy realtor commentary. This stuff is fact, cold hard macroeconomic fact that places me in a spot of confidence for all of us as greater Calgarians. So with that, that is your June market update. I hope it provided you some value. and some context. If you require any specific information relating to your specific scenario, don't hesitate to reach out to one of our Redline market specialists so we can connect you. Thanks again for watching. Don't forget to subscribe, and please share this with as many people that need to hear this message and find value in it. So thanks for watching. I'll see you again next month.